Welcome back. We are going to do our usual weekly recap from last week, the week coming from the Monday 23rd until Friday 27th of August. Of course, in our pairs, dollar, gold versus dollar, Bitcoin dollar, and euro dollar, as per my usually daily analyzed pair. So we're going to do our weekly recap on the 5-minute chart, as you can see, and we are just going through, yes, price action, key levels, but some fundamentals with the help of the economic calendar from the week. So as you can see, let me just, okay, as you can see, we are coming into a very, very busy and dense week for both USD economic reports, the Jackson Hole Symposium, and as well some consumer confidence from Eurozone, Germany, and for ECB, the European Central Bank. Some speeches, I don't have yet the headlines, I'm not studying them on a daily basis, so it will not be part of the analysis, but we're going just to do a weekly recap and sort of market update. If you are in capital hungry, you know what I mean. So starting from Monday, we had some report early in the morning in Europe for the Germany and Eurozone. And in the afternoon, we were expecting the PMIs for USD plus the home sales. As you can see, already see, we had some negative, slightly worse figures for the Eurozone, some conflicting data from the USD because we had worse PMI, but increased home sales. And as well, consumer confidence from the Eurozone was worse than expected and much worse than the previous one. So let's start with euro dollar, shall we? And as you can see, we are starting on the Monday 23rd. We see a very, very all day bullish trend here, interrupted only at the rejection, reaction, more than rejection at 1.1750. As you can see, still not, I still have to understand it, the exact correlation with euro dollar, because as you can see, you might expect that since the data are bad, the figures are bad, it should be going bearish in favor on the dollar. Still the fundamentals of euro dollar are not clear to me. I just started back testing it. But as you can see, in the afternoon, we had conflicting data for the US dollar, for US economy. So we might have seen some spikes up due exactly to some news, but always remember that euro dollar is a currency, it's not as volatile as the gold and Bitcoin. So, and also remember that at the end of the week, we had the big Jackson Hole Symposium from the Fed. So investors were sort of on the sidelines and kind of expecting a very hawkish speech from Powell. As you can see, we started with a very bullish, rejecting this level, 1.1750. But as you can see, we failed here to break market structure. You see prices going up, rejection, yes, but here prices reacting at this previous low to have a shift in market structure, to say, okay, now the bias is bearish. You would have seen this one creating a new lower low, new lower high, new lower low, new lower high. Instead, we reacted here and we made a new higher high. So there was, yes, a reaction at this passivity area, but as you can see, we then created a new higher high on Tuesday around New York session. Tuesday we had, as you can see, very good GDP data for the Germany, for the Eurozone, We had some sales showing good data, and a Richmond non-impacting report. As you can see, we had this, again, bullish trend continuation resuming after price failed to break below these previous lows. Always remember that price, yes, a trend can go impulsive, pullback, impulsive, pullback, but price can also do some rejections, creating another block, and then continuation up. And this is what happened here. Rejection, order block being created, and then up. As you can see, the main point is that you don't want price to break these previous lows, and then continuation down. As you can see here, Tuesday, good figures from Germany, giving some momentum to the euro pair, risky pair versus US dollar. And then we went back into the range 24th. Now we are the Wednesday 25th of August, sorry. And we had, let's see what fundamentals event we had. We have some medium impacting, but with what do you say, what the word, conflicting reports, a couple negative, one positive. I don't know the headlines for this speech, but also we had some good data for the US dollar and as well some bad data for the, so you can see conflicting reports as well from the US dollar. So as you can see, we are still into another block, not breaking above, not making any particular move. We're coming then to the end of the day, coming to Thursday 26th. This is when I think the jobless claims came up. Okay, yes, we have better than previous GDP, although was not as expected, but we had sort of expected jobless claims, but the GDP was positive, CPI was as expected, and this is like the FOMC minutes, but for the ECB, showing no revisions, and then that's why you saw dollar gaining short-term strength, but still reacting at this sensitivity area. Then we come to Friday, and as you can see, as I told you yesterday in the daily recap, we had a very, very dovish speech from Fed Chair Jerome Powell, very, very dovish. Therefore, we had some spike liquidity grab here below, failing to break structure. As you can see, if we extend this line, we never broke the structure. And we had the very, very strong short-term weakness of the dollar due to the delayed tapering, and not even being mentioned once the word tapering during the whole speech, while investors were expecting big important news about the tapering, especially for sort of a date, a timeline, and more details about it. Let's go on gold, which sort of follows the same path. We started the week at this previous low around 1781. We then, the start of the week, made bullish uptrend. This was during Asian, retest of this PSA, continuation up, breaking below above 1789 key level. Let's see if we had anything. We had the conflicting data coming from the PMI and the home sales. Here, and as you can see, give just whipsaws, negative, maybe liquidity grab, but then up, not breaking above 1806. So nothing really giving a direction of the trend, like this one. This was given from the previous week sentiment. We're coming into Tuesday, 24th, where we had home sales, positive numbers, but still whipsawing and not giving a clear direction. This price sensitivity area managed to hold on the hourly time frames, very strong. Until then, okay, we come into Wednesday, 25th, when we have the durable goods and non-defense capital goods, giving as well conflicting numbers. And we are still back into this range. Of course, it's a big range, it's 200 pips of range, but still not giving a clear direction. Why? Because of course we have the end of the week, the power speech. And as you can see, then we have we come on Wednesday 25th. This is this one exactly. So we are back into the range, reacting at this previous price sensitivity area, moving into the range. Here is Thursday with the jobless claims, the preliminary PCE, as you can see, and the GDP, giving yes, back down, good news for the GDP, but jobless claims still not rebounding that much, etc., reacting exactly on the dot, as you can see, not breaking above 1796 for the time being. And then we're coming into Friday, and as you can see, we had a nice bullish trend during London session, reaction, high risk reward sells at 05 previous highs, as you can see on the left. Here again, and then the what I already explained, liquidity grab, and then thanks to the very dovish speech from Powell, we saw a very strong bullish trend due to the delayed tapering, delayed interest rate hikes, and the short-term dollar weakness for the time being. Let's go quickly on Bitcoin. Of course, no fundamental catalyst, no news on the headlines that I'm following, just price action. As you can see, we started the week around this level, over 49,500. We went almost to new highs above 51 key level, and but we reacted at 50,500, which is a sort of psychological PPL. And then since then we moved down, we got into a corrective phase, creating new lower lows, new lower high, new lower low, sort of the same lower high, and then breaking below price sensitivity areas and key levels. As you can see, reacting here at these previous price points that I already showed you here on the higher time frame. We have some bounce, but then still reacting at this previous price sensitivity area on the left. Again, sell-off on Thursday, big range being created on the block, lasting for more than 1 day, and then the breakout, and then reaction again at these previous highs at 49k, 49,300, let's say, 350 something. And this is the weekly recap. No fundamental reasons, no headlines regarding the crypto as far as I know. So this is it. Then this was the week. Very strong movements on gold. General uptrend on euro dollar. As you can see, on the if we sort go on the high time frame. Yes, we ranged. And then still continuation up. And then liquidity grab, and then impulsive continuation up. As you can see it's still, we are still in a bullish trend. It's just not picture perfect, it's not like this, but it's still a clear uptrend, as you can see. And this is it for this week. I hope you guys enjoyed. See you next time.